The information provided in this video is for general, educational and informational purposes only and should not be considered financial or investment advice. The content does not take into account the specific financial circumstances or goals of any individual or entity. Before making any investment decisions, you should seek the advice of a qualified financial professional and consider your own risk tolerance and investment objectives. The views and opinions expressed in this video are those of presenter and do not necessarily reflect the official policy or position of any company or organization. The presenter and stock time-in are not responsible for any errors or omissions in the information provided or for any actions taken based on the information provided. Investing in stock market carries inherent risks and you should carefully consider your own financial situation before making any investment decisions. Hello and welcome to our video on buying stocks in India, brought to you by Stock Time-in. If you are considering investing in the Indian stock market, there are several key factors to consider. In this video, we will discuss some of the most important parameters to look for when selecting stocks, including company fundamentals, market trends, valuation, risk and diversification. We will also provide some examples of how to apply these principles when evaluating potential investments. Whether you are a beginner or experienced investor, in this video we will provide valuable insights and tips for making informed decisions about your stock purchases. So let us get started. Number 1. Company fundamentals. For example, if you are considering buying stocks in a company called XYZ Limited, you might review company's financial statements to see if it is generating consistent revenue and profits and whether it has manageable level of debt. You might also research the company's management team and look for any red flags such as history of insider trading or financial mismanagement. Number 2. Market trends. If the stock market or the industry in which XYZ Limited operating is experiencing a downturn, you might want to consider waiting to buy the stocks until conditions improve. Alternatively, if the market or industry is performing well, it might be a good time to buy the stocks. Number 3. Valuation. You can use PE ratio to compare the valuation of XYZ Limited to that of other companies in the same industry. If XYZ Limited's PE ratio is significantly higher than the industry's average, it might be overvalued and not a good investment. On the other hand, if the PE ratio is lower than the industry's average, the stock may be undervalued and a good investment opportunity. Number 4. Risk. You should also consider the level of risk associated with the stock. For example, XYZ Limited might be a more risky investment if it operates in a volatile industry or if it has a history of unpredictable earnings. Number 5. Diversification. In addition to considering the specific characteristics of XYZ Limited, you should also think about how the stock fits into your overall investment portfolio. If you have a lot of other stocks from the same industry, it might be a good idea to diversify by adding stocks from different industry to your portfolio. It is important to keep in mind that these are just few examples of the factors that you might consider when buying stocks in India. It is always a good idea to do your own research and consult with a financial professional before making any investment decisions. Thank you for watching. Please like the video and subscribe the channel.